Good day all, Anish from BlackBull Markets. Behind me the chart of gold, which is on higher time frames, been in some serious consolidation over the last few weeks. And if you're trading gold, you're probably looking for more short-term opportunities within those tight ranges. And we'll look at those ranges of consolidation areas on the daily time frame shortly, but I just want to outline today's movement. Of course, we saw that nice move to the upside, almost $20 an ounce here, and that was off the back of the US inflation data print, which brought the dollar index lower. And of course, gold against the dollars, gold rallies, dollar generally falls. So you're seeing that nice coming to this nice area of resistance here at 1745. We saw a multiple top formation ever since the 6th of April, since the April has started, around this area. So really, it's going to have to try and break 1745 for bulls to pick up any legs. And what we can see, however, is that nice area of resistance around here, which also marks the 1760 area, which on the higher time frames, where we'll switch to now, shows how gold has been consolidating. Now, of course, this is a fib that's been drawn from the low of 19th of March 2020, 1443, all the way to those all-time highs at 2075. Now, what we can see is that gold really likes to consolidate within these zones. You're seeing a nice area of congestion in which we're currently operating in that played out for pretty much 4 months in 2020, and now this double bottom formation that formed throughout 2021 at 1691, really reaffirming this consolidation area between 1691 and 1765. So that's where we're currently playing in at the moment. And if you want to find some really nice opportunities for a lot of pips within the gold, either to the upside or downside, you're really looking for a break to above 1765 or below 1691 to find further movement. At the moment, we are currently operating within that zone, and until we break out, we may not know further direction. My opinion would be that a potential breakout of 1765 would be more likely than a break below 1691, just given how strongly supported we are at that 1691 level. It's not really fallen below those 1680s since 13th of April, so that post-COVID crash. So we are really looking for bulls to try and move this higher. And what's preventing it? Well, firstly, of course, the dollar index has been pretty strong of late, and that's really holding down the gold bears. And of course, we're seeing pretty stagnant markets where there's not really much in regards to interest rate expectation hikes anytime soon. And markets are really waiting for signals, especially from central banks, to see future directions of monetary policy. And that really is what's going to dictate, in my view, the future of gold as, of course, what it is, a safe haven. Now, you're also seeing a flow potentially out from gold investors, retail gold investors, into crypto assets, where you've seen a boom recently, and liquidity flowing into the equity markets, which are of course at all-time highs. S&P 500 today at all-time high, the Dow Jones, Nasdaq all touching new highs. So this is not the end for gold liquidity, but movement has definitely slowed down. We are looking for legs higher or lower, and that is to probably be driven by central bankers if we do get a driver for the gold market. So if you are trading gold, do beware of those key consolidation areas, and if you're looking for nice movements, potentially switch to the lower time frames to grab $20 or $30 an ounce here and there, especially when you get nice breaks of support and resistance areas, as we know gold likes to play within that. So eyes on the gold chart, trade safe.